It's come in at an annual rate of 3.8%. So 3.8% on an annual basis, and it's also come in at 1% on a quarterly basis. So that is pretty much bang on where the forecasts expected it to be, maybe even on an annual rate a little bit lower than anticipated. But the fact of the matter is that enough for the Reserve Bank to be able to tip its hand? One thing that I can tell you straight off the top is that the Australian dollar has dropped by 0.5% immediately that this has come out. It had been trading around 65.5 US cents. You can see here 65.3 US cents. I can tell you it's even gone lower than that. Next time we see that update, it'll actually be even lower again, sitting around 65 US cents, even lower than that right now. So that suggests that the markets are right now anticipating that there will be a rate rise in Australia. You can see here even the inflation update coming out. The market was stronger. It's pretty much gone sideways since then, so not much reaction out of the stock market from here. So the key right now is just to look at what really is in the middle of this and the important aspects of where the inflation is being created, Kieran. And the fact is that it's in places where you might anticipate it to be. It's coming out of, say, for example, alcohol and tobacco. That's one of the things I tend to look through. It's coming out of health services. It's coming out of transport. It's there in education, in insurance and financial services. So from that point of view, it really is right now in many areas that's suggested to be sticky. And this is why, again, the suggestion is that maybe rates do need to rise simply to try and push some of this inflation out of our economy.
It's bang on where the RBA had forecast inflation to be in the June quarter at 3.8%, Ross. What's your initial feeling as to how does the central bank interpret this?
I've got a sense that they might look through it. That's what the market's kind of telling you. If the dollar is lower, then they're basically saying that the interest rates are not rising. If they thought interest rates were rising, our Australian dollar would have gone sharply higher off the back of it. It's gone down. So markets are interpreting this to say maybe it's relatively benign. And you can see there, look, it's higher than what it had been in December last year, but it is steadying out. And that's the word that Jim Chalmers, the Treasurer, has been pushing out there, and the Prime Minister, effectively trying to soften us up for a higher inflation number. I would suggest they would be relatively comfortable that maybe the Reserve Bank could wait for another quarter. But what you can see here is this is the alarming part, is the headliner rate, at least anyway, has risen to 3.8%. That's not where it's really expected to be. And that's the other key to this. The other point also, just to give you a little bit more of a heads up, is it's the underlying rate that is absolutely key to this. And just going through that, you can see that really the underlying rate has risen as well, and that is still uncomfortably higher than its 2 to 3% band it would prefer, but it is really not right now at 3.9%, as high as what the markets have forecast. And that gives you the sense, as Jim Chalmers says, that the Reserve Bank can stay the course, that eventually inflation will come down, and that should take pressure off interest rates here.
It's interesting when you look at, I'm going to get to Andrew Clennell in a moment for his political analysis. I'm very keen to hear what Andrew thinks on this. I just want to ask you another one before we get to Andrew, Ross, on where the inflation is stickiest. Just looking at the numbers here, housing is among the significant price rises, up 1.1%. And yes, it's almost, you know, for those watching, you look at the rate rises, is it almost self-fulfilling when it comes to housing that, say, mortgages are up, investors are paying more, rents go up as a result?
Yeah, that's absolutely true. So what you're saying is if you raise interest rates, the cost to anybody who's a landlord, they go up, so they tend to want to push their rates up. The second part about this is also do consider this goes back to government policy and goes back to the lack of housing. So if you have a lack of housing, you have naturally inflation that's going to come from the rents that will go through there. But if you look at many of the areas here, health, transport, education, these are the keys that government really has some control of. And so from that point of view, when the government actually says, look, it's not us, we're not creating the inflation, you look at those areas under which it has the most control, and you can see these are some of the areas where the inflation is the stickiest. So they do have certainly a case to answer there.